The senior housing sector continues its rise in the real estate industry. From our humble beginnings approximately 3 decades ago, when there were very few owner-operators who were operating in this sector, to today, when we have approximately $275 billion worth of market capitalization in the business in all sectors. So let's take a snapshot of the sector, and we'll review some of the key things that are occurring. First, let's just chat about occupancy levels. Occupancy levels, even during the depths of the recession, were holding up. Really not too badly, 85, 86% during the lean years. So if we take a look at the most recent statistics, we're looking at occupancy figures in this sector of 90.1% nationwide for the roughly 1.5 million units that are in the investor sector in the business. Public sector stocks emerged from 2012 very strong. In fact, 5 of the 6 publicly traded companies showed dramatic increases in their valuations. The greatest increase was a company called Capital Senior Living, and their stock rose by a remarkable 133%. So the near-term prospects in this space are going to be guided by the following issues: consumer confidence levels, the emergence of an improving economy, the impact of cuts on entitlement programs, which many of us believe will actually benefit the senior housing space, a slowly improving housing industry, and specifically the growth of the apartment sector, and lastly, interest rates, which we anticipate to stay at current levels over the next year, and slowly improving capital markets, both debt and equity. Equity investors, both in the United States as well as internationally, are keying in on this business. Longer term, the prospects are very encouraging for this space. If we just take a look at a few statistics, I think that it will give us an indication of where the opportunities just may be. The United States population of people 75 and older in the United States between now and the year 2030 will increase by approximately 84%. Today, approximately 7% of people 75 and older in the top 100 metropolitan areas in the United States live in senior communities. The level of market demand today, not necessarily being met in the marketplace, is roughly 17 to 18,000 new units per year. We're not even coming close to that. So if we fast forward into the years 2025 to 2030, there is a theoretical demand for 77 to 82,000 units that will be needed in this business. These are recent statistics provided by the American Seniors Housing Association, and even if these numbers are significantly off, which they likely are not, there is still a tremendous opportunity there for investment growth in this space.